This is Daniela Cambone, and welcome back to StansberryInvestor.com. Gold is becoming popular again for pensions funds looking for options in this environment of negative yielding bonds. A Dutch pension fund for specialty chemicals firm DSM is the latest firm to jump into the precious metals, allocating 5% of its portfolio to gold. Joining me today on StansberryInvestor.com to help understand the real significance behind this move is Willem Middelkoop. He is the best-selling author of The Big Reset. Willem, welcome back to the show.
Oh, great to be back. Always great to be with you, Daniel.
Absolutely. Well, anytime there's a big item like this, I feel there's a bigger story behind it. So you are my go-to person to help make sense of what's going on. So according to reports, the pension fund started building its precious metals exposure back in October of 2020. The company said it reduced its bond exposure by 10%. Investing half of the proceeds into gold and the rest split between equities, real estate, and infrastructure. So this play into gold, some might say like, okay, this pension fund, allocated 5% to gold, who cares? But there's a bigger story here.
Yeah, this is nothing short of a revolution. I first should give you a little background on the Dutch pension system. Because we have a very different pension system than neighboring countries like Germany, France, and Italy, who actually didn't save that much for the future, for future pensions. But we, the Dutch, we are savers, and we have a very small country, just 17 million people, but our total pension assets under management is over $2 trillion US. So that's huge. But our pension funds are quite conservative, and they're always serviced by Wall Street because the US is our big friend. They liberated us in the Second World War. So we always look to the West. We always look to Wall Street. We always get the research from Wall Street. And especially with the pension funds, they're very, very conservative, and they always follow Wall Street, although they have been cheated out of their money many, many times. But to give you an example, I've been giving hundreds of presentations. I only gave one presentation ever for a Dutch pension fund. They don't like the alternative view. It's almost a no-go area to talk about gold. And I spoke to several industry insiders from the Dutch pension funds, and some of them told me they weren't even allowed to calculate the effects of gold within their ALM studies. They weren't even allowed to do that. It's like technical analysis in the 60s and 70s. You were fired when you were
Wow. Yeah, I mean, why that pushback?
There's a groupthink. And I always explain this, it's the same groupthink you see in the Federal Reserve and among Wall Street banks. You should remember, gold is the anti-dollar. In 1971, the US went off the gold standard. And from that moment on, gold was the enemy. So the US, all the research, all the science, all the stories coming from Wall Street to the Dutch institutional investors was you don't touch gold. There was always this very strange attitude. But well, some of the fund managers, they saw what happened. If you look at the returns for physical gold in the last 15 years, it's 13%, 13% average return. So you can't ignore the fact. And like you pointed out, to the World Gold Council also made these studies. If you add, it's like Bitcoin. If you add 1%, 3%, or 5% of gold to your portfolio, you will have less risk, and even you could even have higher returns. And we should focus now on the size of the market. The size of the bond market, because this pension fund of DSM has been selling 10% of their bond position. Well, I've been looking into the size of the global bond market. Global bond market is 120 trillion. 90 trillion out of that's the sovereign bonds. 20 trillion out of this 19 trillion is negative yielding. And all these pension funds, they own so much bonds, and now they have this problem to make enough returns, especially now the inflation is hitting us. So they look for an inflation hedge and they look for a tail risk hedge, and then you need to look to gold.
It's very interesting here, Willem. And wasn't there a big controversy about 10 years ago when a glass fund was looking to move into gold, and there was major pushback?
Yeah, there was just after the Lehman crisis. Then there was a very small pension fund of the glass manufacturers, well, very small fund, and they choose to invest 13% of their assets into physical gold. And then the Dutch central bank contacted them and ordered them to sell their gold position. And they had to bring it down to 3%. So this shows that the central banks, you know, they all have joined forces in the last decades to fight gold. Because if you start fleeing towards gold, it's a vote against the international monetary system. It's a vote against the dollar. And I want to give you one more number. I told you that the global bond market is 120 trillion. If you look at the world gold markets, that's 10 trillion. But then let's look at the new issuance. The total new bond issuance worldwide yearly is now 30 to 40 trillion. The value of world gold mine production is only 200 billion. So the bond market is over 100 times larger in new issuance. So if more and more pension funds will start to flee towards gold, you know, I think this explains why gold is up. Yeah, because we have seen the situation in the last 10, 20 years that the gold bugs and some of the smart money, they understood why gold was a great hedge in your portfolio, but the institutional money never arrived. And now we see, and that's why I call the revolution, now we see a break of the system. We had a pension fund in Ohio as well. And I've spoke to several persons involved and with knowledge about these markets here in the Netherlands. And they told me this was a very, very intense process. It took them over a year to convince their board and everybody to accept it.
See, this is what I find interesting, Willem, is that if gold, like you said, once we got off the gold standard, in a sense, became this like persona non grata, and that funds didn't want it yet, and Wall Street didn't want to touch it, but yet central banks own gold, continue to add gold.
Yeah, and this is exactly the reason why this pension fund was able to convince the Dutch National Bank that they should be allowed to do this, because on the website of the Dutch National Bank, there was this quote, I think it's removed now, but last year there was this quote that we will need gold to restore faith in the international financial system when things break down.
Okay, so that's interesting. So do you think now they've been pushed into a corner and are saying, okay, we're at that point where, you know, we're in this negative bond yielding environment, we have no other choice?
I think since March last year, the Corona crash, many things have changed within our industry. It's clear to every fund manager in this industry, and even also in the pension funds, that the amount of money debasement, currency debasement, is incredible. You know, it's 5x compared to after Lehman. It's clear that inflation started. You know, we'll have a massive problem with inflation. Central banks don't dare to say it yet, but look at what happens in industries, double-digit price gains. And the fund managers looking after all this money, they can't ignore it anymore. They can't ignore the currency debasement anymore. They can't ignore the inflation anymore. So some are breaking the ranks, and then it gets very, very interesting very soon.
Fascinating, Willem. And you know, you mentioned the World Gold Council before. That report also pointing that 30% now of UK pension funds said they were looking to increase their exposure to gold. This report just came out, you know, earlier this month. So like you said, it really does seem like a trend or revolution catching major fire here.
Yeah, like I said, the yearly world gold production, mine production, is only 200 billion. And we're discussing a system in which hundreds of trillions need to be invested to get any returns to pay future pensions. You mentioned I wrote The Big Reset in 2013. And I've always been warning people that one day we would arrive at this point in time where gold needs to be revalued and reintroduced into the system, because the market forces will push gold much higher, not $100 or $200, but $1,000, $2,000, $3,000. And this gold market could really collapse under the incredible amount of, look what happens with silver now. The silver dealers are being swamped with just retail demand. So central bankers might feel the need to revalue gold to a much higher level to get rid of retail demand and to only use gold within the institutional, well, parts of the system, central banks and institutional investors.
So if I understand you correctly, Willem, you're saying we could see much higher, substantially higher gold prices where it would make it impossible for like smaller investors to be buying gold because that's what they want to get rid of? That's what they'd want to flush out?
If you look at the current debasement of money and the current rate of inflation, and if you look a few years ahead, it's quite clear that something needs to be done. Otherwise, so many people will lose trust in the current fiat money system. And at that point, central bankers understand this. And to avoid that we could reach the start of hyperinflation, they can always bring gold back into the system, revalue gold, add gold to the SDR, whatever. And then they can rebuild trust in the system. But they will only do that when there's no way out.
Interesting. So right now, as an investor, what do you do with that information? I know you manage a very big mining fund. I mean, do you look for exposure in the mining stocks? Do you look to buy physical gold? What would Willem do?
Well, I've been working on this thesis for over 10 years. So to prepare myself, I started to question what's the best idea when I'm right, when I would be right, and gold will move much higher, and silver will move much higher, and copper as well, because that's also a hedge on inflation. You should buy as many ounces still in the ground as cheap as possible. And that's why we invest in the 100 best gold, silver, copper discoveries worldwide. And let's see how they are revalued over time. Wow. And last year we had 85% return. So this year we're up again. So things are going well.
Really good thoughts, Willem. I appreciate you always bringing the real story. I knew there was a bigger story behind that Dutch fund. It kind of went low key in the media, but I thought, wait, there's got to be something more here. So I called you. I'm glad I did.
I'm glad it's a Dutch topic, finally.
You're the perfect person for it. Willem Middelkoop, author of The Big Reset and all-around market expert. Thank you so much for joining me here on StansberryInvestor.com. I always appreciate your insights and taking the time to speak with me.
Always welcome.
And thank you all for watching. Be sure to stay tuned to StansberryInvestor.com. We have more great content coming your way. But while I have you all here, don't forget to sign up for Premier Access on DanielaCambone.com to watch my exclusive interview with the Einstein of Wall Street, Peter Tuchman, trading strategies and life insights from the most iconic broker on the floor of the New York Stock Exchange. You can only get it by signing up at DanielaCambone.com, premiering May 27th. Must watch, folks. Don't forget to sign up. That's it for me. Thank you all for watching. I'm Daniela Cambone.